Hey friends, fear is what drove this market this week. Up, down, all around. Fear of what? Fear of inflation, fear of recession, fear of the Fed, fear of earnings, you name it, we were afraid of it, and the volatility in the market showed it. So what do? Well, I think that swing trading is a way around the fear, especially the fear of recession. And I covered the trading tips for swing trading in today's session of Trade Your Way to Freedom, and share it with another trader who you know could benefit from hearing what we have to say from our two expert panels. Let's get into today's session right now. Hey, good afternoon, everybody. This is Dennis Wilborn, the AutoPilot Trader. Welcome to Trade Your Way to Freedom. It's a session we do every Friday at, about almost every Friday at 11 a.m. unless they're 11 a.m. Pacific time, unless there's a holiday like there was last week. I want to welcome Anil Parikh. Anil, thank you for joining.
Yes, sir. Good to be here.
And so you said earlier that spring has come to the East Coast.
That is right. It's now in 80s, so that's very comfortable and nice.
I remember my son Dennis Jr. graduated from Maine Maritime Academy up in Castine, Maine, and we went up there for the latter part of, I think he graduated latter part of May, and spring comes to Maine later than, up in that northern latitude, comes later in the year. Yeah. And all I know is coming from Hawaii, we froze our butts off going over there. So It happens. And so, again, if you're joining us over on the YouTube channel, welcome aboard. Glad you're saying, hey, Jerry, how you doing? Glad you see you're over there. And whoever else is over there, welcome aboard. Let's get into today's session. We've got some really good stuff to cover. Neil's got a great stock we're going to be talking about. We've got a really clear, some really excellent stuff we can be talking about for what's going on with this index and what's going on with this market. So were you surprised that the market sold off after we've had, kind of good, inflationary information with the CPI and all that kind of stuff? Although one could question whether or not it was really that great, where the price on everything except for gas and food actually went down. But so that was a big market mover. And also the Fed's report on, Anil, what did you think of the Fed report, or, the minutes from the Fed meeting? Because they said basically they're expecting a recession, but that it'll be the word they used wasn't gentle, but it was a kind of short, mild, there you go, thank you, a mild recession. What'd you think about that, Anil?
That's, I don't know. I guess they know what they're talking about. Of course, all my indicators are so far not saying that bad things coming up, but we'll see.
Yeah, we will see. And so, I hope it's not one of those self-fulfilling prophecies like we see so often. We also want to take out what will be moving the market over the next couple of weeks. And the big thing that I think is going to be moving the market, there's several of them. One, the inflation and recession, there are fears that are currently stoking the traders' sentiment and causing them to, probably make some dumb decisions on getting in and getting out of particular trades. And so just be aware of that. We have the Fed coming up the 3rd of May. It is 80% probability that they are going to price in and that they are basically going to do another 25 basis points, which would bring the interest rates up to 5 to 5.25%. And currently the probability that they will increase another 25 basis points in June is up at 42%. So the anticipation is that they're going to ease off and stop, doing it. Coming on the heels of that, though, is the fear of recession. And I've been doing a lot of research here lately about those fears. We're going to talk about that a little bit today in our tip for today. I'm going to be talking about how swing trading can help you eliminate and alleviate the fear of recession. And then we get into our stock picks and ETFs. And so let's jump into that right now. Here's our swing trading tip for the week. How swing trading defeats the fear of recession. Now, you can agree or disagree with me, and that's okay. That's why we encourage people having various opinions. But here's some ways that learning how to swing trade can help defeat the fear of recession, because oftentimes the fear of recession is basically the fear of the unknown, because you don't know what's going to happen to you, your job, and all this type of things, and you may see it happening to your neighbor. And learning how to swing trade can help you increase your control. By trading a plan with an edge. You can basically start learning how to make an income, which brings us to our second, income generation. That's the second way it helps defeat the fear of recession. Learn to take profits on income. That's one of the reasons why I, encourage people, take your profits at 10%, 20%, and then run a trailing stop back to break even on the remaining shares. That way you can, if you do get into a big winner, you can still participate in the big trade, or not the big trade, but you can let your winners run. It increases your resilience. What does that mean? It provides fuel for your positive mindset. In other words, you're focusing on what you can be doing to offset the fear of recession, which is always a healthy thing for your mental state. Improve your financial literacy. We can basically learn a lot from what's going on during a recession, because the majority of us have not lived through recessionary times. Anil and I are, we can remember the recessionary times probably back in the late 70s and into the 80s, where we were paying 18% for a mortgage on our house and that kind of stuff. You remember those days? No, you're not that old, are you, Anil?
No, but I've seen it. I've seen 13%.
Yeah. We had a place in California where we were paying, I think, 16+%. Shorter time horizon by swing trading. This reduces your risk profile, and especially if you're applying the rules up here of taking your profits as you go. Number 6 is it helps you focus on the solution and not the problem. And that oftentimes is, if we get wrapped up in the problem, it can scare the heck out of us, and it's not a great way to go. So, hey, as we like to say, master the few and watch your success explode. So those are my swing trading tips for today. Anything you want to add to that, Anil?
Yes, these are right on, and I love it. One additional thing, a couple of days ago, Mark Minervini was on IBD, and his session, if people have not watched it, it's a pretty nice session. And it's kind of talks about the tips also right in there. It kind of reminded me. Excellent.
That, Mark is a really good momentum trader. And so I really love what Mark has to say all the time. So if you haven't signed up for our PEP routine training, you can jump over to this website. It's shown right down here at the bottom. And it's a really inexpensive training session. It's a value of about $400 because it has a bonus training on candlesticks also. So jump over and take a look at that. And if you're interested, I think I have, there you go. There is the link. And it's a 100% money back guarantee on that training session. If you don't like it, you get your monies back, but you'll save over 95% on that training. So here's our disclaimer for today. Remember, here's one of the things I like to talk about is winning principles to remember. A trading system with a proven winning edge is very valuable. Having the patience and discipline to wait for the system setups and triggers, that's what makes your system priceless. And oftentimes learning how to do that takes time because it takes time because we tend to be very focused on instantaneous gratification, which doesn't lend real well to being strong and patient. And so, Anil, did you see that? And so before we get to the analysis on the markets and that kind of stuff, Anil and I are going to go over our stock picks for the week. And Anil has the first one. And Anil, you came up with FND.
Yes, it has showed up a few times in my system. I had a daily signal, I think more than a month ago, then a weekly signal, and now I have a monthly signal. And according to the IBD setups, it's close to breaking out, but still can have a room to run. So
yeah, this looks like a little bit of a cup here, maybe with a little bit of a handle. So what's your trigger to get you in? Are you going to go ahead and buy it here? Are you going to wait till you get the breakout of the cup and handle?
No, I'm going to buy it here. I always buy early. I actually own some of that, and I'll probably add some.
Oh, okay. And then what is your objective? Okay, what's your upside target? And do you take your profits as you go?
Yes, I take exactly what you said, except I do it slightly differently. I take my 10%, and then I do a third, and then take 15%. And the remaining, I let my system give a signal. I'm finding out the weekly triple screen systems are very reliable.
Okay.
And it can take me up quite a bit.
Yeah, I really like that idea of, that's one of the things I sat in on the conference. I think Troy was on it also with Mike Lamoth on the launch of his book. And he basically, I was listening to what they were talking about is how to let your winners run. And on all the stock traders there, they talked about the way they let their winners run was basically they would take their profits on their way up on, maybe up to 2/3 to 3/4 of the position size, and then leave the rest of it break even to start off with the rest of the position. And then once they were basically get another setup where they could get back in, they would raise their trailing stop that way. And I got to think about it. I said, what a brilliant way to do that. And I think I did. That's what I covered in last week's training session. So if you haven't seen last week's video, that was a really good trading tip about how to let your winners run. You can see that over on the YouTube channel. I love this stock. I would, again, nice pattern on the weekly, and looks like it's in gear. I mean, it's above all the moving averages, and it is up into an area of potential resistance, but it is stacked in the proper way to go. So my stock for today is PERI. Have you been watching this one?
Yeah, PERI looks great on my system.
Okay. And what I'm looking at, folks, is right now, I mean, it's kind of I wouldn't say it was a buy specifically right where it's at, simply because I'm a pullback trader, and it's been respecting the 20-day moving average. So I think a price down closer to the 20-day moving average would be more appropriate and less risk. But also it's showing us where the sellers have come in today. Then basically it's looking for a comeback into this about the 38.81 level up to $39. And this is just a nice, gentle, slow mover. It may, in fact, get back down here to the uptrend line. But if I wait until I get a pullback in between the 8 and the 20, even if it drops down to the uptrend line, I'm still less than 5% away. I really like this. So I like this. It's got great fundamentals on it. It's at 98% comp score, 98% our relative strength. The accumulation distribution score is A+, and it's a 1.4. And all full disclosure, this is one of the stocks on our top 5 lists that we run with the AutoPilot trading service. And so, yeah, so this one looked pretty good, you say?
Yeah, as a matter of fact, on this particular stock, the weekly buy signal came back in August of 22, and it's not broken yet. It's just going up. And we had a chance with the daily one again back in January, and that signal is not broken. And right now it's pulled back a little bit, so it looks very good.
Yep, and I'm really liking it. So yeah, Jim, thanks. Mark Manavini book Trade Like a Stock Wizard states that historically most stocks form a new base after a 20% raise. That is correct. And Bill Anil mentions something very similar to that. He says basically what you'll do is you get a pause. A lot of stocks will pause at about 20%, and they may just go nowhere for a while. And so that's why it's a good idea to take some of those profits off the table, because if it's just sitting there doing nothing, it's dead money. It's dead money. I can't say it any plainer than that. It's dead money. Okay, Neil, let's go ahead and take a look at the interesting things that we're seeing on the S&P. And this is the spiders. And I highlighted last week in this box up here, this is on the weekly chart, this box of or a zone of resistance defined by that high there. That's the high back in the first part of February, yes. And then this one over here back from June or July of last year, that forms a box of resistance. Price action actually broke out this week and has broken out above the downtrend line. At the same time, we are getting, the sellers came in shortly after that. So the sellers came in a little bit shy of this bottom level right here. And what kind of a candlestick do I have in place? If we close right where we're at today, we have what is called a bearish harami, which is a candlestick reversal signal. And one thing to remember with candlesticks, and that way, if you do get that training session, training over on the PEP routine, you'll get that candlestick training video also. And what the candlesticks will tell us, this is a reversal signal. And so it basically highlights that this is probably at least a interim top. The candlesticks tell us where, they don't tell us how much. So how much could we reverse? Well, reverse back down to the 20 or the 50 could be inappropriate. You see we had a bunch of gap and goes over here. So I would say, we could pull back to 403. And if we're actually in if the uptrend is to continue, it needs to replenish there. The momentum would hopefully be down and be ready to reverse to the upside. So that's what I've got going on with the spiders. The NASDAQ also is, NASDAQ was taken in the shorts just a little bit earlier today. TSI on the momentum on the NASDAQ crossed over about right there at the beginning of April and has kind of just driven sideways. Now that is kind of forming a little bit of a sideways flag. And so we may break out the bottom of it. And as you can see today, while yes, I'm not really going to call this a bearish harami. Why? Is because it's not happening at the end of an uptrend. In other words, I'm driving sideways here. And so this is just churn. This is just churn. And so I'm not calling that a bearish harami, even though it is the body is inside the candlestick from yesterday. But it's not an inside day because we did make a new high this morning on that. And so that's what we've got going with the Qs. I want to show you just a really quick something that I picked up last week is take a look at what's going on the equal weighted Qs for this for both the NASDAQ and the S&P. And as you can see, the equal weighted Qs, it did not break out above these past highs like the Qs did. Okay, here's the high from February over here on the actual Qs. There's the high from February, and we do get a breakout. What does that tell us? It tells us that there's only about 10 to 15 stocks that are actually moving above their 50-day moving average on the NASDAQ. The rest of them are actually below their 50-day moving average. Yep, that's right. Difference may show money is hiding in mega tech stocks, and that's exactly right, Troy. And so as you can see, that's what that's telling us, because it basically is telling us that we have a negative divergence between the full NASDAQ, if you equally spread, what the NASDAQ does. And so we're showing that is a negative divergence, if you will. Now, what about the Russell? The Russell is also being challenged. And again, I'm not going to call this, while yes, what we see on the Russell right now, we do see an engulfing pattern that is bearish. Now, I would call the one that happened earlier in the week on Wednesday, yes, that is a bearish engulfing pattern. I had 1, 2, 3 days up, and then we really completely engulfed the small body there. And so it was an outside day. Outside days are also considered to be reversal signals to the downside. And that's exactly what we have here. If the Russell closes below the 8-day moving average and maybe just a little bit lower, I would look for it to run lower, back down and test out the support there at the 173 level. And if that fails, look for it to roll on down here to 170. And after that, down here to about the 167 level. Now, if you are an option trader, this makes an opportunity. I would look to trade IWM to the downside, and maybe even the QQQ, or on the flip side of that, take a look at trading TZA to the upside. We'll be talking about that with the premium members at the 12 noon sessions. One, what makes the Russell different is I'm way below the 200-day moving average. I am now breaking back down below the other two moving averages. The 8 to 20 never really crossed to the upside. And so basically all of my moving averages are stacked like the path of least resistance is down on the Russell. Anil, what do you think?
No, that's great. I got one question.
Yes, sir.
When it looks like gloom and doom,
Yeah.
but your system gives you a strong buy signal on a stock,
Okay.
what do you do?
I want confirmation on my price action that it's a buy. And of course, I use candlesticks and breakouts above trend lines and that kind of stuff for my buy signals. And so that's where, if my system's still giving me the go signal, I have to have my trigger in place. My trigger is something visual that I can see.
Gotcha. Thank you. Helps.
Hey, folks, sorry for the mix-up on the mic. Apparently, a button got pushed, so I just want to say aloha. God bless everybody. Have a wonderful weekend, and look forward to seeing you next week for Trade Your Way to Freedom. Same time, same place, 11 o'clock a.m. Pacific time. Aloha.